G'day there, Investor Alex. Welcome to another ETF Spotlight review. Today we'll be taking a look at VGAD, which is the Vanguard MSCI Index International Hedged ETF. This ETF may interest the buy and hold investors seeking exposure to a diversified portfolio of over 1,500 international shares that are relatively unaffected by currency fluctuations, and obviously you have to have sort of a high tolerance for risk because we're investing in the stock market. Yeah, hang around. I think this one is interesting. This one effectively is the hedged version of VGS. So if you've interested in the VGS, I'll put a card up in the right hand corner so you can find the video on VGS. Anyway, stick around, definitely worth your wait. Well, hello there, Investorholics. This is Scott. Crack the Sky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. Okay, so the fund objective. So VGAD seeks to track the return of the MSCI World ex-Australia with net dividends reinvested hedged into Australian dollars index before taking into account the fees, expenses and other taxes. Bit of a mouthful. Quick overview of the fund. The ETF provides exposure to many of the world's companies listed on the exchanges of major developed economies around the world, very similar to VGS. The ETF offers low-cost access to a broadly diversified range of securities that allows investors to participate in the growth potential of international companies listed outside of Australia. So if you're looking for something outside Australia, this might be for you. The ETF is hedged to the Australian dollar, so the return, income and capital appreciation of the ETF is relatively unaffected by currency fluctuations. So there's no uplift from currency in this one. So if you're looking for some uplift from the currency, you have to look at the VGS, but we'll touch on that a little bit later. Why are we buying? So we have a competitive long-term performance. So Vanguard's investment approach provides investors with an efficient way to capture long-term market performance. So diversification, the fund invests in a diversified portfolio of securities, which means the fund is less exposed to the performance fluctuations of individual securities, if I can get that out properly. So as I sort of said in the opening slide there, there's over 1,500 securities in the portfolio, so very well diversified. Low cost investing, the fund has low ongoing fees as Vanguard strives to minimize the costs of managing and operating the fund. So that's a bit of an overview there. Okay, we've got a net asset value of $70, trading just below that at $69.91. Market cap of $994.9 million. Major costs not too bad at 0.21%. Distribution, so your dividend gets paid semi-annually, January, July. Dividend yield, you're looking at 2.35%, not the best, but it is international, so you'll have a lower dividend payout as opposed, well, you know, in relation to Australia, because Australia is typically much higher than the rest of the world. VGAD could be a simple solution to achieving global diversification in your ASX portfolio. You know, you can just buy this ETF and the job's done. You're globally diversified. The ETF holds over 1,500 businesses across major developed countries such as US, Japan, UK and France. Like a lot of other internationally diversified or portfolios that hold international shares, a lot of them exposed to Apple, Microsoft, Amazon, Alphabet, Facebook, and also Visa and those type of companies, because they're just just so big. They'll take up most of those international ETFs or market indexes anyway. I believe this ETF could be a great buy to act as a long-term, diversified and passive investment. After the most recent market crash, the current price possibly represents a good opportunity to build a position for the long term. So as we always advocate here, is to do your research, because there are other options out in the market. Have a look at IHWL, also have a look at IHOO, and also have a look at WXHG. They're all hedged funds as well, so it might be worth having a quick look at if you're in the market for a international hedged ETF. Okay, let's have a quick look at the performance. So performance since inception, you're looking at 7.3%, not the best, but not the worst. As I mentioned, you're going to have Apple, Microsoft, Amazon, Alphabet, Facebook, Johnson & Johnson, Visa, Nestle, JP Morgan, and Procter & Gamble all taking up the top 10. So VGAD is hedged to the Australian dollar, and that omits any long-term diversification benefits of foreign currency exposure. So you just don't get that because you're hedged. So VGAD is incredibly cheap and gets even more appealing as the fund grows. So pretty much the more money gets invested, the cheaper it becomes to manage the fund. So that's better for all investors involved. As we sort of pointed out down below here, the top 10 approximately equal 16.9% of net assets. So I suppose you're diversified, but you're not diversified, if that makes sense, because there's so much of the ETF sitting in the top 10. This ETF could serve ably as a core to a global equities allocation, just because of its low costs, low turnover, tax efficiency and diversification. Given the large cap skew, as I just kind of mentioned, investors could combine it with an ETF that provides exposure to other smaller or mid cap type stocks, whether they be global, or maybe you want to look at adding an ETF that covers the Australian market. So you might be able to buy STW or VAS or one of those other indexes that cover the ASX 200 or ASX 300. So then you get your international and your Australian exposure in two trades. It's quite likely that the unhedged version would appeal to more investors. So you quite possibly might get some more advantages by buying a VGS, which is the unhedged version of this one. But having said that, this is still highly rated by Morningstar. So it gets a silver rating from Morningstar, which is effectively 4 out of 5 stars. So still has a good rating, but quite possibly the unhedged version might be better. But there's been lots of inflows into this ETF, so it's definitely popular. So VGS and VGAD, they're definitely both popular ETFs, and there's quite a lot of people on the Australian market buying into them over the last 3, 4, 5 months, that type of time horizon. But definitely something to buy and hold if you're interested in something like this. So definitely do some research. It's definitely well worth your time. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are, expand your investment horizon, and crack your financial sky. Thanks, guys. See you later.